In this video, I'm going to be showing you how to combine candlestick pattern with market structure to get a perfect trade setup. By the end of this video, you're going to understand why structure gives meaning to candlestick. And before we talk about candlestick itself, we need to understand what market structure is. Market structure is basically the foundation to each and any of your trade, and candlestick is just for confirmation. So you really want to make sure you're using your foundation, which is market structure, to get your trade set up, and then use your pattern, which is your candlestick pattern, for execution, just for confirmation. So what is market structure? Market structure is simply see market being an uptrend. It's just basically how markets move. See markets in an uptrend, you tend to see markets doing higher highs, higher low, higher highs, higher low, higher highs, higher low. And in a downtrend, you tend to see market be doing lower highs, lower low, lower highs, lower low, lower highs, lower low. So that is just it about market structure. We also have the rating market, but we're not going to be talking about it. We need to focus on what we as a trader, we always want to see in the market, which is market being in an uptrend, which is the bullish trend, buying uptrend, higher highs, higher low, higher highs, higher low, and the bearish market, which is the downtrend, lower highs, lower low, lower highs, lower low, guys. So let's go straight to the chart and let's use a clean example of the market to say this. So the first step is understand the direction. So first thing you want to do is understand the direction of the market. Like, let's use this Euro CHF as an example. On the daily time frame, you first of all need to understand the direction. Is the market trading to an upside or is it trading to the downside? And currently on the daily time frame, guys, we can see the market is currently trading to the downside. So we're having a bearish run right here. So we want to continue looking for more sales to the downside, right? So the daily is just for you to know the direction. So you can now scale down to the 4-hour or 1 hour, but I would like to start with the 4-hour, check the last, and currently I can say that this was the last low that was being taken out. I think this guy, yeah. So this was the last low that was being taken out, and after the low was being taken out, remember, any support that turned resistance is also a strong resistance to also push the market down. Am I correct? A support that turn resistance and also turn support can also as well shift, gives you a market shift. So we had this break here. Maybe we have this break, we still had another push that took out this 4-hour. This is another push to the downside, took out this low right here. And you expect a continuation, right? And this is the swing of the trade right there. So you see your swing like this, you already know that you're making a decision from the last low that was being taken out to the present low, right? So when you mark out your zone, you're trying to look out for your decision from this low to this high right here. So anything you're doing, you want to protect this swing high and look for your entry right there. And the only entry right here is this elbow right here. So if you mark it out, you just need to be patient. So if you take out this low, and obviously there's still an algo there, algo here. So even if you take it out, we're still gonna wait a bit. And if you continue to the downside, it's going to give us multiple more breaks. Multiple more breaks keep happening. We just got to know that this zone market is not coming there anymore, and we want to continue. How do we know that market is not coming to a certain level anymore? It's when you understand market structure, you understand the break, market structure break, market structure direction, that high, like this higher high, higher low that you're hearing. You're making sure you're seeing, let me see, market is in an uptrend. You make sure you're seeing a break. When you have a break like this, then you can see you have your swing, and your swing is going to be this high that is saying being taken out, that you want to look at for your trade from, is going to be your swing. So always want to make sure it's a full body break like this. It's a full body break like this for you to now call this your swing and try to protect this low right here and find your entry wherever you trade. within the low below here, and make sure anything you're doing, make sure you're protecting this low. So this is what the swing is about, just same as the sell. Let me scale this. Let me just use the inverse scale. Just same thing as the sell. When you see a drop like this and you saw it push like this, once you just see a break and you have a swing like this, a full body break, and you always want to make sure that you understand market direction first before the breaks come in. Your market direction, where is market coming from, how is it heading, how is it moving? That is how you get to now make your decision. Okay, market is in a downtrend, you want to continue the downtrend and you want to find your entry. Market is in an uptrend, you want to continue the uptrend and you want to find your entry, guys. So that is just how simple it sounds, right? So now is where the candlestick pattern comes in. So to me, I don't use candlestick randomly. It's obvious, yes, it's always there, but you cannot use it randomly. Like to me, the way I trade, I always wait for my candlestick pattern to be formed and for me to take the entry in it to form on my first thing. That's market structure that I marked out. Like you can see this structure right here that will mark that like this. So if I want to use the candlestick, I'm using a candlestick from this protected high right here, you know. And which candlestick one that I trade is simply the head and shoulder pattern. So you might be familiar with head and shoulder pattern. So that is a candlestick pattern that I find so nice to trade with. So when you have this head and shoulder, this is the very best pattern to trade with, guys. And that is where I trade, and that is it all the time in the charts. When you see me mark out a trade, you always see me mark it out like this. So head and shoulder pattern is really the best way. So when you get this head and shoulder pattern, imagine you have a swing like this, and you have a swing like this from this zone right here. Let's say you have a swing from this high to this low, right? You mark out your swing like this, and this is your break. Let's say you call this your break, right? So you didn't, like I said about market structure, when you have a swing like this and your break is valid with a full body break, you want to find your entry from this low to this high, and you want to protect this high, right? So if you want to protect this high and you see market already taking out a low and you check the direction is in the downtrend, you want to continue looking for the downtrend, right? And you now have this shoulder, this first shoulder, then you have this protected high. To me, I immediately execute the next shoulder coming in. I don't wait for it to like form before I execute. I just, once it's just coming there, I'm executing. And I'm not just executing just candlestick pattern, I'm executing with other confluences. You have to make sure your liquidity is there, your liquidity is valid, is sitting very cool at your 50% Fibonacci level. Your high, that your high in the sell is well protected, and make sure it's the swing high that you're protected. Don't put your SL. Let me see, you have a trade like this. Don't try to put your SL below here, and when your high, your protected high is up here. You need to protect the high. Then you give your 1 to 2 or 1 to 3 targets, and you step out of the market, just as how easy it is. And let's go to the chart and let me show you a clear example of you bringing in candlestick pattern, which is the head and shoulder pattern, with market structure, and getting a nice perfect trade to take, to you really risk your money on. Because it's not just all pattern you see you need to risk your money on. You need to make sure you're risking your money to what you know, what you have studied, played out multiple times, and have the high chance, even 75% of playing out. So you have to execute that. So that is really what trading is, and how you get to get your entry and take this trade all like that. So you can see, just like an example I got here, this head and shoulder that I said I just execute immediately. That is just same thing that is happening here. You can see we have this first shoulder and the head, and I'm waiting for here, and immediately it's just come back to this zone. I'm executing the trade just like that, and my 1 to 2, and I'm out of the market, guys. And let's use another example. Which pair should we use as an example? Now, I think GPUSD. Oh, not bad too. GPUSD, because I think I have something there, but it doesn't look too nice. But I still will risk it if I let the notes first of all get started. So guys, so first thing first is satisfying direction of market. I'm currently on the 4-hour break, and also coming like this. So what I was really watching in this market, which is not too nice, I'm just marketing out. That is how you study. I was really looking at something like this as a break, but not too much to be called a break. Obviously, this right here was a break because it was a full body break and market dropped to the downside like this. Let me take off all this look rush. So first thing first was really, this is not really a low to be called a break. So I'm just studying and just marking out, so let's call this a break. Let's call this a break and call this our swing, right? So I'm trying to show you pattern as well, like the head and shoulder pattern, right? So you can see the markets came back. Remove this swing. First thing was, you see me mark out our swing structure to make sure that I'm finding that head and shoulder pattern on the swing high, like the swing protected high zone. There's something like this. Let me mark out something like this. Yeah, I can just mark out something like that. I'll be like, okay, I have my swing and I'm watching for my entry right here. So you can see how markets came back to that same place. You can see give us a clean head. This is from here. This is the one shoulder and gave us a head there, and this is another shoulder. Isn't that clear, right? It's clear. So this is the candlestick pattern that I trade, that I see multiple times in the chart. And if you go straight to your screen, go straight to trading view, you're going to see exact same thing. When you study, many of the times you're going to see the same thing and understand what I'm trying to show you guys. So that just it's about bringing candlestick and market structure together to get a perfect trade. If you're new here, don't forget to subscribe, click the like button and comment the next video you will love me to drop next, guys.